Good morning, everyone. You've tuned into ET now. It's 11:30 on your clock, and it's time for Market Fatafat. I'm Karunya Rao, but before we kickstart the series of all the stocks to watch out for, here's a quick bite from somebody very, very important. The new government must lower taxes on equity to boost entrepreneurial spirit. In conversation with ET now, CII President Vikram Kirloskar said the way to grow economy is not via debt, so equities must be encouraged. Here's an excerpt.
I've just told philosophically debt can't grow the economy. Look at how to make equity more attractive. I think government has heard it, and I'm sure they'll study it further. I'm not a tax expert, and I'm not a factory expert, but not a tax expert. So I'm hoping the appropriate people will take cognizance of this. I think they have. They've certainly heard us, and something will come out.
How big are the liquidity issues in the economy? Do you think the RBI is doing enough, and we can see some resolution to that in the days to come? The NBFCs have been demanding for a special window for some time.
The government has heard everyone. I think they're paying attention. I don't think they will do things, just off the cuff say something. I think they'll study and come up with a better solution.
Mr. Gadkari also spoke about how the cost of capital in the economy is pretty high. That's been
That's exactly the story I'm saying. Why a high cost economy through debt is not going to grow. So please encourage equity.
There has been also a huge slowdown with respect to the auto sector. Do you see that happening and continuing for a long time? And what kind of impact will it have on the entire FY20 sales?
I seriously hope it will not continue. It's a tough challenge. If you ask me to pinpoint why is it slowed down, I'm sorry, I'm not able to say down. There are many different areas, and I don't have enough data to say why it's slowing down. But it's certainly slowed down. We are struggling hard how to improve it. Let's see what
you also spoke about a trust deficit between the government and industry.
Industry, government, industry, society. It's all over. From CI side, we want to improve our governance. We are working hard on it, and I hope government responds to that.
It's ET Now's 10th anniversary on Monday. Any message for the viewers?
Well done.
All right, back to Market Fatafat. Then you're watching the most comprehensive market wrap, which promises to spot the hottest movers in the stock market. Over the next 30 minutes, we take you through the top buzzers and spot where big trends are emerging. Let me introduce who all is joining us on the show. There's Kunal Bothra, there's Swati Hotkar from Nirmal Bank, and there's Soumya Sharma from the research desk. Welcome, guys, on board. Let's start with stock number one. Then it has to be HDFC and Gruh Finance. These are the two stocks on our radar and the ones which we are tracking very closely. Now, what exactly is the update there? Well, sources tell us that Blackstone is the likely anchor buyer of Gruh Finance shares in the big block deal that seems to have such a significant impact on the stock price as well. Other names are also surfacing who have likely to have picked up stake as well. There's ICICI Prudential, there's HDFC AMC and Birla who could be among the buyers other than Blackstone of Gruh Finance shares. Do remember the likely seller of this deal is HDFC. And about 4.2% of equity has been traded via today's block deal. So all eyes will be on Gruh Finance as well as HDFC to see whether or not by the end of the day they were the key sellers and who all are the names, because these are just reports and sources that are suggesting that to us. So let's wait and see for the final verdict on that. But for now, let's focus on stock number two, IndusInd Bank. Kunal, tell us what to expect.
The stock has been going down, I think, since last 3 days, particularly Karunya, and from 1600, 1620 levels, it's now sub 1450 levels as well. So there's already a correction of more than 10% into the stock. Now the worry on short-term charts is that the stock is now very close to its critical support level, which is at 1370, 1375 mark on spot level. So maybe yet another day of downside, and you could see the stock challenging that very strong and critical support on the short-term charts, and that could be a strong test to define the trends going forward for the stock price. So I think IndusInd Bank should be on traders' radar. 1375 is a major support. If the stock breaks that, then there could be far more significant downside for the stock price in the near term.
Right. Even as we speak, Kunal, we are witnessing a massive downside on the stock. It's lost about nearly 4% in trade. But on the flip side, there are these two small finance banks which are also in our focus. There's Equitas Holdings and there is Ujjivan Small Finance. Soumya, there's been a note as well from UBS. Tell us what it states about this particular space.
Well, yes, Karunya, in fact, the market participants are actually looking and taking cognizance of the UBS notes. In fact, yesterday also, both IndusInd and Yes Bank were down on back of UBS downgrades. Today, they have a positive note when it comes to small finance banks. They have maintained buy on both Equitas and Ujjivan. They are maintaining a target price of approximately 450 rupees per share for Ujjivan and 190 rupees per share for Equitas. However, having said that, Equitas remains their top pick. They believe they have even raised their EPS and the loan growth for Equitas and believe that recent decline in the wholesale rates is a positive for both of them, particularly on the margin front. Although having said that, both the stocks have actually have come down from the day's high and now have settled. Equitas is particularly settled at around 0.73% higher in trade today.
Right. A lot of action is taking place, in fact, in the entire financials basket. And another stock to watch out for is Bandhan Bank. Swati, the stock is under tremendous pressure today. Tell us, how are you assessing the chart pattern?
Yes, Karunya, the overall view on this particular counter is cautious to the bearish as such. If we check the weekly chart, the stock has given a breakdown of its rising channel, which indicates a very cautious sign. The breakdown was at around 550-560 levels. From that level, we are continuously witnessing the selling pressures on every rise also from the every resistance levels. At the current level, 530 is acting as a very strong cluster support. If it manages to give a breakdown of that level, then I believe that the selling pressure will likely to drag this particular counter towards 510 and 500 levels on the downside. So I believe those who are having a long positions, they can hold on with a stop loss of a 530 rupees on a downside, and if it breaks that level, one can create a short positions.
Right, that's Bandhan Bank for you. It's lost nearly 2% in trade as we speak. But on the flip side, there's an Adani Gas that's also in focus, one of the key movers and stocks to watch out for in trade today as well. There's reports suggesting that the French energy giant Total is going to be picking up 30% stake in the company. I'm talking about Adani Gas. I think the stock will be coming up on your screens quite shortly. Yes, it's higher by 4.5%. That's the one. So yeah, buzz is that Total is going to be picking up 30% stake in the company, and the deal is likely to conclude somewhere around 5,500 crore rupees. So that's the big update. It's expected to trigger an open offer to public shareholders of Adani Gas, and Total may end up having a roughly equal stake in the company as much as Gautam Adani. This is, of course, a report-based story at this point of time, but a very important one, and clearly has had a very strong impact on the stock price as well, which has gained almost 5% in trade today. Let's move right on then to our next stock to watch out for, and it's Ajanta Pharma. Kunal, it's like most of its peers in the pharma basket, even that one is under pressure. But what can we expect in terms of stock price moves going forward?
So again, very similar charts to what I discussed earlier for IndusInd Bank. The stock has been dragging lower. It's below its 50-day moving average, 20-day moving average, clearly defining that the stock is into a short-term downtrend. And we've seen now that the stock is precariously poised in terms of its short-term supports. It's at 950 or sub 950 levels on current basis, and the stock has broken some key support levels as well. There could be yet another round of downside into the stock price. So for investors looking to short, this is a weak stock into a short-term downtrend and could drop by another 25 to 30 rupees. So 920 to 925 could be the near-term target range for Ajanta Pharma short.
That's right, but for now, this stock is looking fairly beaten down in trade. But Soumya, tell us, a lot of these insurance companies are in focus, especially the public sector undertaking ones. Can you tell us what's the update on that front?
Well, yes, Karunya, particularly the life insurance companies that are in focus. Well, in fact, the entire insurance space is in an attractive spot right now. According to the recent DI data, the life insurance new premium in May has jumped by over 43%, and the new premium income stood at around 18,414 crore rupees versus 12,838 crore in the month of May last year, and LIC has particularly registered a jump of over 46.6% this year to nearly 13,496.7 crore rupees. In fact, the highest jump was witnessed by HDFC Life of over 52%, followed by SBI Life at around 44.9% apart from LIC. So these entire life insurance companies are in focus on back of a sharp jump in the new insurance premium.
All right, thanks for that, Soumya. Meanwhile, the stock's clearly looking relatively much more healthier in trade. But another name from the financial space which is once again reeling under pressure is Indiabulls Housing Finance. Swati, tell us, what's your take on this counter?
See, Karunya, the overall view is definitely bearish to cautious at the current level. Yesterday, we have seen some pullback rally from 588 to almost 700 levels. But I believe that the stock is just trading below all the important moving average, say 150 and 200 DMA. Also, the fact that it is trading in the pattern of the low tops, low bottoms, so which indicates a potential downside. I believe on every rise towards say 690 to 700 levels, one can create a short positions. On the higher level, one can keep a stop loss of a 720. I believe that the stock will again continue to create its selling pressure towards say 650 to 630 levels. So it's a sell side from my end.
All right, a sell call on Indiabulls Housing Finance. The stock is down nearly 3% in trade. Meanwhile, another stock to focus is Wockhardt. There's been some news flow with respect to US FDA. They've carried out an audit on bioequivalence center and no observations whatsoever have been issued. The outcome would lead to approvals of ANDAs that are in the pipeline, and that's exactly why you're looking at a Wockhardt that's bucking the trend that's being witnessed on the pharma index at large. It's gained 1.5% almost at this point of time. But yes, let's move right on then to our next stock number 10. Kunal, it's Adani Ports. What's your take?
So Karunya, Adani Ports, Nifty 50 stock is trading at the upper end of the trading ranges. It's consolidating in a very narrow band, and I believe that the narrow band breakout is closer to 430 levels. So the stock is just about meandering on this 425 to 430 range since last 3-4 trading sessions. One of the stronger in terms of the price performance relatively as compared to many of the other large cap names which are getting beaten down into this lackluster market. So I believe Adani Ports could be a decent bet. If it breaks out above 430, it could trigger another 4 to 5% upside from those levels. Traders can take a stance above 430 on the buy side, keep a stop loss of 420 and look to go long.
Adani Port looking a little muted in trade. But guys, request you to hold on with us. We have to touch base with an important guest on our show. We have Keith Stan joining us right here on ET Now to talk about what's going on globally with respect to commodity movements and developments. Keith, thank you so much for coming on board. Just want to start with asking you about iron ore prices, which are seeing a massive surge. Is the supply situation that bad?
Well, yes, and thanks for having me here again. The supply situation is tightening. Hearing some feedback. I'm sorry. Some feedback, yeah, we're seeing the Vale Dam issues that have happened since last year. They are still persisting, and then increasingly we are also seeing shortages from the Australian market, with some of the ports having some congestions. At the latest, we have also heard some of the Australian miners coming to curtail some supply in the spot market in order to maintain their shipments of high quality iron ore to the Chinese customers.
What about steel? Do you see prices for steel as well as iron ore being capped because of the expectation of a lackluster demand?
Well, if you're talking about the Chinese situation, I think it's a pretty much split between what sector we're talking about. So if you're looking at flat steel, this goes into making of automotives, white goods, machinery. There is some slowdown in growth in China happening on that front, and we are therefore seeing some of the steel prices take a hit. But much of the market is expecting the Chinese government to continue to invest in the infrastructure sector, and this should be helpful for long steel products like rebar, for example, and wire rod. On the property front, there have been a lot of efforts to try to curb the over-exuberance in price rises, but we have seen actually from the start of the year, actually for the latest figures from April, property prices have resumed a slow, steady climb. So that might be one of the factors that could help support the long steel prices. But overall, entering into 2019, I think it's fair to say that we have come to a situation where steel making margins for especially Chinese steel mills being a much weaker than what we had seen in 2018, which was a very good year actually.
You know, global growth is also slowing down. So would you say that that would hurt the prospects for steel prices going forward?
I think what we've observed of late is that indeed there has been a slowdown in growth, not just within China, but also outside of China. So we are tracking some of the trends in the spot market, especially for global steel trade. Recently, we have even seen cargoes of flat steel coming in from Europe to the Southeast Asian region. Southeast Asia is clearly one of the key consuming regions, not just in Asia, but actually also globally. So we have not seen European steel come to Asia for a while now. It's difficult to say whether this will be a longer-term trend, but I'm sure you would have noticed as well that the European steelmakers, actually 45 CEOs of European steel companies, they appealed to the European government to do something to address some of the steel that they feel is being deflected to the European markets as a result of the US tariffs.
Right. Let's also talk about what's going on globally. The biggest concern right now is the ongoing US and China trade war. So do you think the market has moved on and priced in the expectation of a full-blown trade war between the two entities, or is there still hope for things to improve and for the trade war to sort of get resolved eventually?
So I think it's pretty difficult to forecast what will come out in terms of the outcomes of the trade wars. Situation keeps being fluid and it changes every single day with the latest tweet by President Trump. But well, what we have seen so far is that confidence in consumption actually on the retail side, that's perhaps taking a hit, especially in China. Whether it will spill over into the rest of the region, into the rest of Asia, that's also something that I think we all need to be on the alert for. Actually, some people have identified some bright spots in this because a part of the manufacturing might have shifted outside of China to other countries like Thailand, maybe Vietnam. So it may not be all that bad depending on which perspective you're looking at.
Okay. You know, we were talking about the massive surge seen in the iron ore prices, but you know, steel prices are really not participating in the rally, and this is going to lead to margin compression. So would it be to the extent that we may see some Chinese steel mills once again considering curbing operations? Could it be that bad?
It's a very interesting question. It's a very good one as well. From what we have observed previously, Chinese steelmakers tend not to let production actually be led by government policy or even demand and supply situations. I think the key factor here is margins. Yes, we have seen annualized production figures, crude steel production figures by China reach 1 billion metric tons in April. If you analyze the April figures, that's certainly worrying to a lot of market participants, and a lot of critics, of course, are saying that this is happening in spite of the supply side reforms having taken place. But this year alone, we have seen actually 11 million tons thereabouts of new or actually replacement capacity having come on stream in China. They produce mainly flat steel products, so that could mean greater supply in the flat steel market. But beyond that, we are also expected to see further capacity come on stream for the rest of this year in China. But beyond China, what's also in fact worrying is that Southeast Asia is bringing on stream its own capacity. So Southeast Asia had been one of the main consuming regions, absorbing a lot of what China has been exporting. So once they increase their own self-sufficiency, I think a situation we might see is that so far over the past 2 years, I think very strong Chinese domestic prices have meant that there have not been so much of an incentive for Chinese mills to export. So we have seen actually 2019 perhaps being the fourth consecutive year that steel exports by China have declined in terms of volumes. If the steel mills in Southeast Asia bring on their own capacity, then that might mean that in the event of a worsening domestic market in China, they might need to export more. But then the big question here is who is to buy all that steel, with Southeast Asia being more or less also self-sufficient. So at the moment, we're still seeing Chinese steel margins on the positive territory, but things could change quite quickly. So since the start of this year, it has been actually on a steady decline.
Right. Just before we let you go, want to also understand about iron ore prices. You think they'll stay above $100?
Well, it's exceeded 110 in fact, and I think what would be key in determining where prices might go would be whether Chinese mills cut production, which is a question determined again by the margins that they make. At the moment, they're still in the positive territory, so perhaps we are not seeing anyone announcing or planning some cuts in production. But bear in mind as well that we are in the third quarter, we are approaching the third quarter of the year, and this tends to be a period where there is a seasonal lull in demand in China, especially with rains happening. It's also the case in actually some parts of Southeast Asia and India, of course, where the monsoon will also tend to curb some of the demand. So where Chinese mills, if they start to cut production, then perhaps there might be room for iron ore to take a break. But I would say at the moment, actually, the iron ore situation has not been driven so much by demand as it is by supply. So supply tightness seems to be the main reason we are seeing why iron ore prices are rising at the moment.
All right. Keith, great chatting with you and great getting in your perspective and your insights on what's going on in the iron ore domain as well as for steel. Thank you so much once again for joining us as well. And on that note, I think we're completely out of time on this edition of Market Fatafat, and that's all the stocks we could cover. Thank you so much, Kunal, Swati and Soumya as well. With that, it's a wrap. All right, Adi Godrej has also, given us a bite, given us his reaction as well to my colleague. Let's take it across to that conversation.
It's a considerable slowdown, especially from, say, a year ago. And I do hope the budget will address it. The budget should generally address higher growth in the economy. Growth has slowed down, and a lot of action should be taken on encouraging growth, especially through taxation reforms.
When you're saying, sir, taxation reforms, what are the low-hanging fruits here? How can that be dealt with?
See, corporate tax on large companies in India is one of the highest in the world. They have reduced it on smaller companies, but not done it on large companies.
Right.
And large companies are the one who deliver employment.
And that's been a
etc.
long-standing promise of bringing
You're right, it was already promised. It's not been done, so I do hope they do it in this budget.
Would you also say that the cost of capital is very high in the economy, and the RBI has been moving, slowly but surely, but that has been a big concern given liquidity issues as well?
That's right. So the cost of capital, considering that inflation is low, is high, and unfortunately the RBI reduces the rates, but it's not being passed on because banks have several other problems. So the issues with operating companies get mixed up with the issues with defaulting companies.
Right. Let me also ask you, this budget, I've been speaking to a lot of people here at CII, and they're saying there is a need to incentivize investment. How should that really happen? What have been the demands from the industry side?
Well, what you do is you create structures whereby investments get tax benefits.
But this government has said that, we would not be okay with giving any sort of leeway to corporates in terms of, special incentives or something like that.
Well, that's a question. Do you want growth or do you not want growth?